Good day to you, ladies and gentlemen. Welcome into another market outlook for this week. My name is Yemi Oladeye. I'm a global financial market analyst. Starting for this week, for the months of February 17th to 21st, what is the opportunities we're looking at in the market? We're starting with the fundamental outlook, which is on Monday, and focusing on the high impact news only, which are the red folders from the forestfactory.com. And Monday is going to be an holiday, which happens in Canada and USA. And that may be a dull day a little bit in the office. And on Tuesday, we have the AUD coming up for 30 a.m. Nigerian time and 8:30 a.m. for Great Britain pounds and 10:30 a.m. again for Great Britain pounds and 2:30 p.m. for Canadian dollar, which is the CPI for Canadian dollar. And of course, on Wednesday of that same week, we have AUD coming up 1:30 a.m., which is the wage price index. 2 o'clock in the morning in Nigerian time, we have the New Zealand dollar official cash rate and RBNZ rate statement, which is also coming up. And then we have another one, NZD 3 a.m., which is the press conference, and Great Britain pound CPI coming up 8 a.m. US dollar will weigh in with the FOMC meeting, which is 8 p.m. Nigerian time. On Thursday, we have the AUD employment change and unemployment rate 1:30 a.m. Nigerian time, and unemployment claims in the USA by 2:30 p.m. And Australian dollar will come up with another RBA government block speaks, which is 11:30 p.m. On Friday, we have Great Britain pounds. This is when we have most of the high impact news for the week, where we have the Great Britain pounds retail sales, we have the euro, we have that a lot on that Friday. We have it 9:15, we have it 9:30, and we have Great Britain pounds coming up 10:30 here, which is the flash manufacturing PMI. We have the Canadian dollar coming up 2:30 p.m. Nigerian time, which is the core retail sales, and USD will be coming in around 3:45 p.m. Nigerian time, which is also the flash manufacturing PMI. The Canadian dollar will be coming lastly for the week by 6:30 p.m., which is the Macklem that it will be speaking. And all of these has potential volatility in the market, and we're going to trade according to what opportunities we have in the market with this series of fundamental events. And then don't forget US dollar that is coming up on Tuesday. The President Donald Trump will speak, and of course we know what that means. That may tend to bring a lot of volatility in the market, though that's still tentative, but it looks like something you should forget, but don't forget it. All right, without wasting time, let's go straight into the analysis that we have for the week, starting with the weekly outlook, and let's start with that of DXY on the monthly time frame. Let's get into action. All right, last week we talked about DXY behaving a particular way, and actually it did. So for the monthly time frame, we saw DXY has been 3 months bullish, and last month it was also between the bulls and the bears after grabbing level of liquidity above this price level, with no certainty for this week, for this month, that we're going to experience this little bit of bearish. And of course, this is the bearish moving on the monthly time frame. And let's go straight to the weekly time frame and see the opportunity we had there. Last week, we tend to see that we said the last analysis we do, I remember I said was expecting the DXY to break this level here, to break this low, which it did. Of course, I saw it breaking this level, and of course, it has done so. So, which means for this week, we'll still be expecting something fantastic from the DXY movement. And what would that be? All right, I'll be expecting DXY to still move downward a little bit more, at least to take out this low right here. And if that is going to happen, how will it play out? Definitely, we'll go to a lower time frame to still see that opportunity. So, ideally, I'll be expecting something like this, right? Like this on the weekly time frame, basically. But then let's go to the daily. Let's see what that tends to be on the daily. We trade what we see and not what we feel in the market. So that's the energy that keeps us going, and it's been fantastic all the day. All right, so this is it on daily time frame. Look at what that means. So on daily, if you'll be trading this, I'll be waiting patiently. You see this level that I was taking out. Okay, the market will find a way around it again. And also we have we have the grab of liquidity at this high level here. So when we do, we have a straight movement downward to create a shift, excuse me, to create a little shift below this price level, which was the old low where we had this. And market has broken that successfully with bodily closure of candlestick. And then what else are we expecting? We expect the market to actually still move back up a little bit into a range like this. Let me show you into this range, and the market should do something like this, a bit of buying into this range and take out or take care of this little low we have here. This is the outlook on the daily, and let's further see the opportunity. Let's further see the opportunity we have on the 4-hour time frame. Let's see if that also match. All right, this is the 4-hour time frame. As you can see, the range still remains. And when you look at this, it seems more like you're looking at the um, expecting more downward movement, something like this, right? So basically what we're doing is we're looking at the opportunity the market is presenting at this very much time. And then we have nothing else to do than to follow the market, uh, trend. Trend is your friend, they say, right? Without wasting time. So on 4-hour time frame, what we'll be doing is very simple. This load that was taken out completely, that's what we'll just be refining on the 4-hour time frame. And when you do so, you're going to realize that we still have a little level of an imbalance right here. And when we're going to leverage on that, we happened on AUD US dollar last week. If you remember, we had the analysis, and that's really happened. So the timing it was, and the market still moved in there. So don't joke with any opportunity. Don't leave the money on the table. Just play with proper risk management and let the market do its thing. So on 4-hour time frame, when you calculate this range, exactly this range from here to here, this is just a little bit before less than 50% of the move entirely. Ideally, what we just be targeting is to ensure that the market still find a way to around this level before we see a sell opportunity. But then this is 4-hour time frame. Don't forget, we've seen this on daily, and this level has been covered even on daily. And the threshold of that covered zone on daily is where we're anticipating to see the market movement. All right, that is on DXY. So let's go straight to the daily, to the Euro USD and see how this will play out. Starting the Euro US dollar on the monthly time frame as well. Don't forget we analyze from the monthly to 4 hours, and we can go low, but then it's good we stop at 4 hours or 1 hour so that you can have opportunity to know the intraday opportunities that we have here. The little shift here and there in the market may tend it to be difficult to do more of analysis that works for the scalpers. But I think pretty soon intraday opportunities like that, so I'll be coming up to share some entry protocol on the lower time frame, like 3 minutes and 5 minutes for scalpers. But for now, we stay on this monthly, weekly, daily, 4-hour time frame, and sometimes I do 1 hour. All right, so let's go with this energy. And on monthly time frame for Euro USD, we have 3 consecutive bearish movements month for the Euro US dollar, and the last month was that of tussle between the bulls and the bears, which also grabbed a level of rejection from this price level, which was about around 1.01836. And then the month of January, February, it turned out to be a bullish movement for the market on Euro USD. And this energy has been so much, the momentum was much. And when you look at the price action right there, you see that this whole thing is happening in a level where we had the imbalance right there. And of course, this is also a very good point to also spot this opportunity when liquidity has been grabbed from here. When you look critically into the candlestick ranging, and you will find out that the opportunity we had there to take out this high before all of this happened, this is the fair value gap in between that happened before this level was taken out. So it's okay for us to wait on the monthly time frame to see this happening now. So with buying we're looking at is of course expected, and we've said this before now. So this remains a bullish momentum for this month, therefore, and if going to be any reaction later on, we'll be looking forward to a place like this. Let's say that's about 250 pips on average, or 230 pips on average into this range on monthly time frame. So this thing looks pretty much a buy opportunity. And let's look at what we have on the weekly. On this weekly outlook, therefore, so I'm going to take out everything. Sorry, I'll take out everything. So on the weekly outlook, the previous week was bullish for us, and we had the opportunity to see the liquidity that I was grabbed from here. And that basically we're expecting this level to be taken out. I personally am expecting this level to be taken out in the market. And on weekly time frame, this has not happened. But last week was bullish enough, and we saw the bullish momentum right there. So what we have here is quite simple. We're only waiting for the market to do something like this to break into this range now. So for this next week, or for this week, we're expecting to see something like this break and take out this high. Simply, that's just the simple truth about what we're expecting. This has been showing like it's been showing kind of range, liquidity range above here. And what we're expecting with the massive momentum of last week candle, we expect more bullish momentum, whereby a little bit of retracement and taking out this liquidity range. And after then, we just see how it takes out the complete high level here. And I say that is about 100, 230 pips on average. In fact, this is about 150 pips on average. And of course, the only reason we could be doing that is between this price level to this price level, we have a value gap, which was mitigated right here. So we're expecting this level to be taken out, and we expect more bullish movement to this price level. And that's we take the price an exact 440, let's say 450 pips on average. But then between then and now, we know many things will happen in the market, which will also fill the gap. So I'll still be here to update. And of course, this is also a very good price point where we can expect the market coming into, because this is just another liquidity zone here where we can also have the market coming into. And when you do that to current market price, that will give you about 260 pips. And of course, that is the exact price level on the monthly time frame that we were expecting before now. So we have one opportunity to see more bullish momentum in the market for this week on Euro US dollar. And let's check that one on the daily time frame. Let's look at what we have. So sorry, I'll be taking out everything you've seen, and just to make the charts really plain and for you to understand when time frame you're looking at is good for you to grab your own value. All right. So on the week daily time frame, we saw all of these are just trend line ranging. Okay, and when we have something like this, there is always a momentum that is going to break through, and it will definitely go above those price levels, above the trend line, so to say. Okay, and then looking at the monthly time, daily time frame for Euro US dollar throughout last week was a bullish momentum. It moved bullish on Monday, Tuesday, Wednesday, Thursday, and Friday. And basically, it's approaching the high of the daily candlestick right here at 1.0533. And with that energy, what are we expecting in the market? It seems more like the market has not gotten there and it won't get there. But of course, the market will create a level of balance, and definitely retracement is exponentially expected right there. So what do I mean? Looking at this level here, this is a fair value gap we had before the swing failure for the weekly, because this is an entire weekly range, all right? And this happened here is a swing failure, of course. So what will definitely be happening in my expectation, what I'm expecting to see is the Euro USD to retrace back into this range before it take out this high, before it negotiate for this high level. So this is my outlook on Euro US dollar. Let me see. This is it here. So this level is where I'm expecting Euro US dollars to still get to on the daily time frame, and that is about 195 pips or 200 pips on average. So basically, this is what I'm expecting on DXY for this week. And going to a 4-hour time frame to make it simple, look at this. On 4 hours, the energy remains the same. Can you see that? So I'm still expecting this level, this old level, to be taken out in the market. And just to see this clearly, we see that on 4-hour time frame, what we've seen over time is a testament of what the market has played out before now. What do I mean by that? Look at this level. Look at this level here. Look at this swing. Okay. Look at how this liquidity was grabbed and it was swept through right there, and market created its own new high and series of higher highs and higher lows. And of course, right here, the market creates, it took out its that liquidity just like it did here. And after then, the market moved down, created gap and all of that. So where I'm going exactly is that after this happened in the market right here, then we have this high level, which was a price point that came into this fair value gap, right? And it sold. That was justified. We had this level, we had this level, we had the market creating another low, and all of this happening is within the external range liquidity from here to here. So which makes the same level to be very, very active for us to expect liquidity for the bears in the market. And later on, we had the market doing higher highs and higher lows, higher highs and higher lows, creating and shifting of balance and moving back upward. And where's exactly the market right now is at just the other block zone for this chart right here. So with this now, we're expecting more bearish momentum on the 4-hour time frame. So I'll still be expecting this to happen on 4-hour time frame, because basically this is what the market is looking like. And don't forget what we've done on the daily time frame. Don't forget we're expecting that bearish momentum, of course. And looking at the daily time frame, looking at this again, I'm coming. daily time frame, looking at daily time frame, don't forget what we're expecting on daily time frame is to see reaction as market will come back into this range, right? So go to 4 hour time frame and let's do that. If you're trading on lower time frame, of course, it is essential for you to also do the same. Within this price range, it's expected to see markets coming back into, but with 4 hour outlook, in fact, we may still have something to chew, which is more than that, because this is the new bearish wave from this price level. And of course, if we are ranging from here to here, this is a very good point to also look out for a new bullish momentum. We call this repricing for the bulls in the market. All right, that is basically what this is all about. And let's go to Great Britain pounds US dollar. We spent so much time on this, but I believe this is clear by everyone. Okay. Monthly time frame on the Great pounds US dollar, it's been bearish for 4 months, and this month tends to be bullish. And unlike the previous guy, EURUSD that had a doji candle for last week monthly time frame, this is basically having a bearish candle with rejection from the bulls in the market, which failed to take out this low. Right, this week, this month, therefore, is been bullish, and where exactly we're expecting this bull market to still get to? Can I actually still feeling for this monthly or fair value gap right here, which is about 239, 240 pips on average. Let's check that on the lower time frame. On weekly time frame, let's look at what we have. Last week was a bullish one for Great pounds US dollar, and it actually broke the previous high on the weekly time frame that we're expecting right here. And with this outlook now, it means we are waiting for more bullish momentum on Great pounds US dollar on the weekly time frame. And this is the monthly fair value gap level we're expecting the price to get to. And if it will get there this week, that is about 240 pips on average. And let's go to the daily time frame to further see more opportunities and clarity on Great Britain pounds US dollar. And looking at this carefully, we saw that the market has, has actually created a fair value gap before it actually moved to break the previous high level. So with this now, we'll only be looking at how the market will find a way to come into a lower price range like this when the market open. That's when, if the market is not even opening with a gap already, this market might open with a gap down, which I expect the market to still come within this range on daily time frame. And that means I'll be expecting more of a bearish momentum into this range before this happens. So anyone who taking a buy from this price level here about 1.2505 or 1.2500 should be expecting to still make a move of buy move momentum of about 300 pips on average, because that is exactly what I'm looking at on the chart right now. And that is on the daily time frame, of course. And let's further see what we have and on lower time frame. Okay, so we're moving very fast because we have just few of these guys, and the opportunity is evident on the chart, and we just want to leverage on what we have. Okay, so when we refine this in the market on 4 hour time frame for intraday opportunities, then we can see more levels that you can trade with. Ideally, looking at this formation, therefore, looking at this formation, you will see that this high level here was what the market took out completely here. So looking at what the market has done from this swing to this swing to this swing, you have that three wave. And what else are we expecting? The market has created a shooting star candle right there. The market has created a shift in this direction right here with this bearish candle. And when you look at these three candles together, this will give you more or less evening star candlestick formation pattern. With this liquidity that was grabbed here, with this full momentum closing for the body and closing below the bullish candle that initiated the candlestick formation pattern for triple candlestick formation pattern known as the as the evening star candlestick. What are we expecting? Right here, we have the opportunity to at least see the fair value gap residing between here and here. Of course, we expect more bearish momentum. Well, before then, before this level was taken out completely, we had, I think it was around the same price level. Let me see. Okay, it was around the same price level where we have this fair value gap too. We took out this high level, which took out this high. It was around that price that we had this fair value gap. And of course, I will still be expecting more bearish momentum into this range, which is about 50 pips or 40 pips thereabout. But basically, I will expect the market to take out this level, to still take out this level before we have more bullish momentum. So this is it on 4 hour time frame. And when you look at that, you find another opportunity to see bearish movement in the market. But ideally, I'll go with the bull in this market, grouped in pounds US dollar. So everything they're doing about the sell, I'm a little bit worried about it. I just want to find a confirmation at any of the liquidity zone for me to take a buy opportunity. And that is that. On AUD US dollar, starting with the monthly time frame, let's see what we have here. This guy has also been bearish for the past 3 months. And last month was it also between bulls and the bears. This month has been a bullish one successfully. And we still have little bit that's tapping into the other block, into the fair value gap of the three last month. But then it's just at the base of that. Okay. So we still expect a little bit of push into the bullish direction for AUD US dollar. And let's see the weekly outlook on that. Let's see what we have. On the weekly outlook, therefore, it's looking very good because this guy is, for the first time really for this month, I think, is showing a clearer version of movement than the Euro USD and Group the Pounds USD. There is a massive bearish momentum right there. The liquidity has been grabbed after this low was created. Liquidity was grabbed here, shifting the low, and when liquidity was swept here, we have this range of candlestick whereby we have the bullish momentum for last week, creating a high above the previous high of the last week candle right here. Okay, with this outlook, therefore, what are we expecting? More bullish momentum, of course. Please, we're expecting more bullish momentum in the market. Last week, we expected this low, this high to be taken out, and this is it already taken out. And this week, therefore, we're expecting more bullish momentum. So we see this level to be taken out in the market, whereby we have something like this to deal with in the market. We have something like this. At the end of the day, this is exactly what we're looking at. Okay, based on what the market is creating, what the market is shifting, and the fundamental news coming up, we expect all of that to play and to drive as a catalyst, to act as a catalyst for this momentum. Let's see this on daily time frame. Let's see what we have on daily time frame. Yes, this high is also a level we're looking at on daily time frame for the market to take out, and that's about 345 pips or 350 pips on average. But that will be probably next week, not this week, depending on the series of events coming up. But I believe strongly so. All right, but this week I will expect more. Everything you've seen here in this bearish momentum is just trendline liquidity, which I believe the market will find a way to take out every one of it. Every pip every pip matters now. Okay, it's valuable. So this is 200 pip. Let's say 200 pips on average on AUD US dollar on the daily time frame. Let's see what we have on the weekly, on the 4 hours. We've seen this analysis from the monthly to weekly to daily. Now let's see the 4 hours on the AUD USD. So I'm taking out everything. Sorry, I just want the chart to be neat as possible. All right, so you can understand exactly where I'm going and what I'm seeing in the markets as much as possible. All right, this is it here. So we also have a return in this range right here with this candle, which is also a shooting star for the last 4 hours of the market for the last week. The last 4 hours of the trading session ended with a bearish momentum on AUD USD. This alone is a shooting star. These two combined is bearish engulfing. And when you have this, no matter what happens in the market, if this is happening on an area of value, then we can expect the market to move again into the next liquidity zone. Where is the next liquidity zone? It's around this price level. And when you do the calculation, it's about 22 pips, which is very small, believing the market can do more. Just like what we saw on the gravity pounds US dollar at the edge of that sponsored candle that broke the eye, we have the fair value gap, and this is it on the AUD US dollar. Again, this is it here, right here. So I'm expecting this movement, which is about 45 pips too on average. Looking at this range one from here to here, for market to come here is still a very good deal because you need a better retracement for a better expansion, and that's basically the energy of the market's movement. Okay, anytime we see trend forming, this is exactly what we're looking at. So looking at this now, does it make more sense to you? A retracement, then more bullish momentum, more like this, expecting the market to do this, to do this, to do this, and just move. Okay, basically, this is what I'm expecting on AUD US dollar. And don't forget, our level is still very much high, right? So between that price level, a lot will happen within here to test this level. But don't forget, the energy of this movement has been seen on higher time frame, and that is what keeps us going. Market has created a lot of shift over the time, and now it's looking bullish. So the bearish momentum is also expected. I told you, you need a deeper retracement for deeper expansion, so which is normal. All right, that is it on AUD USD. Let's check out what we have on USD CAD for the week. We go to gold and we wrap up. I think we've done well. So last week we were expecting more bearish momentum on USD CAD, and it happened. As a matter of fact, I was part of the bears in the market because I joined the sell last week. So last week created a shifts up and we saw how it has been bearish ever since then. So this month so far has been bearish for USDCAD. And let's see the energy on the weekly time frame. Last week was also bearish because the previous week was bearish, and this bearish momentum was massive. I was expecting this level to be taken out last week. According to the analysis we had, I was expecting this low to be taken out, and you can see last week took out that low completely. So the all of last week did about 160, 170 pips in total in the bearish momentum. This week, what are we expecting? Expecting more bearish movement in the market. Expecting what? More bearish momentum in the market. All I want to see is to see this price level, this low, to be taken out in the market. How will that happen? I don't know, but the price will speak better. The market will play its thing, and that's about 365 pips in the market. So basically, this is the outlook on weekly time frame, and let's see the daily. Let's see how this may likely play out. This is the market. We play by what we see, all right, not what we think in the market, not what we feel. So ideally, this level remains valid because the next candlestick that will be forming from here technically. But if there is a gap up, then I'm expecting it to be within this range. If there's a gap down, I'm expecting it to be below this range and find a way to come up back again into this range before the bearish momentum will continue. So ideally, this is what it looks like on the daily time frame for this week on USD CAD. And you see every liquidity pool you look at here, market is coming for it. But let's take this bit by bit. Let's see what we have for this week. And of course, you remember we work with what the market do, and we work with the range, we work with the values, we work with what we see, and that's how we've been going. All right, let's go to the 4-hour time frame and see further instruction on that. For our time frame is showing pretty much simple. Like we've had a series of bearish momentum and series of range. We have ranging candles right there. Okay, we have a lot of ranging candles right there. And the only thing is, I'm expecting the market to come back into that price level. On a higher time frame, we had that favored gap of or imbalance within this price range. On 4-hour time frame, it's not looking like there is any imbalance right there. So what does that mean? The analysis on the high time frame we stick to because that's what really matters in the market, where opportunity will play out at the end of the day. So basically, this is what I'm looking at on USD CAD, a bit of buy momentum before the sell will continue. And this sell will be good enough to give about 400 pips in total, and which is not too much for what we can make on USD CAD on a weekly basis. So no matter what it is, this level is a very good level to look out for in the market for this week when you're taking your profits. You cannot wait for the market to do all of this in case the market is not doing that this week. But then I strongly believe that we're going to make something reasonable out of USD CAD bearish momentum for this week. So this is the outlook, your target here, your target here, and of course, it's going to be a fantastic week. So let's keep the energy up and let's see what we have there. All right, let's go with a let's go with gold. This is a gold. Yeah, last week we were expecting more bearish momentum retracement on gold because this guy remains solidly a bullish momentum. And I said it last week that the good part of it is it has no reference point to know where it's going to reverse, because this is just a guy that breaking its own record by itself every month, every week. And then let's look at this monthly time frame on gold has been bullish for the month of February, and then it has gotten to a price level of all-time high 2944, and it then retraced a little bit at now 2882.23. And let's see further instruction on that. Does this matter? Yeah, it really matters because this remains very strong bullish momentum. Maintaining a steady week of bullish momentum like this is quite impressive in the market. Nothing like this, right? You see, taking out this OI on its own in the market, and what are we saying? It has been buying for the past 7 weeks without retracing per se, without any reasonable retracement on weekly basis. And exactly what it's doing right now is what we're looking at. So basically, what are we expecting within this price range here? Within this price range here, it has broken through it. Is it coming back into a price level like this before it continues to buy off, or what else are we expecting? So let's go to the lower time frame to see that. On the daily time frame, Last week, we were expecting a bit of retracement, even though we said that it is a bullish momentum and it's a strong bullish momentum at that. So anything I will be doing on gold will be bullish. Okay, so currently now on the daily time frame, it created a bearish candle on Friday, which happened to be a bearish engulfing candlestick formation pattern. After one candle right here has created that sweeping that liquidity with this candle. So of course this level has been protected somehow, but with what we saw on Friday, I was expecting this candle per se to be the one to do this. Like I was expecting this candle to be the one. If this candle was the candle that took out this high and created a bearish engulfing like this, it will be more reasonable for me to look out for a sell, a more sell before I'll buy. But with what it is what it is in the market. This is exactly what the market is showing right now. This guy leaves us with imagination of it just retracing much, but of course, this is still much of a high momentum in the bull direction. So the retracement may not really last long, but I'm expecting the retracement to get to this price level anyways. But then it remains a strong bullish momentum for now with what we're seeing in the market. But ideally with this outlook, we expect more bearish momentum. So looking at this, exactly this level, yeah, exactly this level. So I'm expecting the bearish momentum to get to this price. And on 4-hour time frame, let's look at that. On 4-hour time frame, let's see the information we had on that. Can you see all the choppy movements is just trendline liquidity and this candlestick right here? So let me take out this guy. So this candlestick right here, I'm looking at this one particularly right here. So I'm expecting more of bearish momentum to take it out. And of course, this candlestick right here too, the wick of this candlestick, expecting the market to still take it out too. So basically, I'm expecting this little bit of movement here and something like this. So this is what I'm expecting in the market. Going to 1-hour time frame, let's see what that may mean to us. You see, it has actually started creating that bullish momentum from the last couple of hours of last week. Can you see that? It has shifted and created that grab of liquidity, creating its own theory right here. And what I'll be expecting is to see this movement into this range where we have the imbalance playing out at a level where a low pricing was taken out. This was the low pricing here. This is a low pricing. It was taken out here with this candle sponsored here. So creating fair value gap within this price range is really reasonable for the market to retrace into this price range and move. And of course, the market might actually gap up rather, gap up into this range, and we still have the movement. So basically, this is what I'm expecting on the dollar, on the DXY USD, Great Pounds USD, AUD USD, USD CAD, and this is good. And this is what I'll be stopping for this week. Ladies and gentlemen, I wish you all the best, and this will be a fantastic week for you. Don't forget that the opportunities in the markets are enormous, and I want you to throw proper risk management. Thank you, and do have a wonderful week ahead of you. Bye for now.